GKFX Prime presents the Market Analysis Webinar.
Hello traders, welcome back. You know what time it is. It is your weekly dose of charts. We've got more setups for you, more high probability scenarios in the markets. My name is Dima. As ever, we'll be going through some charts for this week. I've picked out some, selected some better quality setups, the highest probability charts that I have found. If you found others, feel free to share below. Thank you for joining me, and let's as ever go through the process as we always do. Have a look at the calendar and then some setups and how things fit in for this week and what setups we've got for this week to choose from that we can home in on, zone in on, and really get the highest quality trade possible, highest probability. Let's begin with the calendar as always. So I've got a little list for the week. Let's have a look at what's going on, get a bit of perspective and see where the volatility may kick in this week. Monday, we've got a bank holiday on the dollar from America. On Tuesday, we've got monetary policy minutes from Australia. That may be of lesser importance. And Wednesday, we start kicking in as usual, the middle of the week. On the pound, we've got CPI numbers. CAD, we've got core retail sales. And then a major one, we've got the Fed chair testifying later in the day during New York session. So watch out for that one. And on Thursday, we have a big day. We've got from Switzerland, the SNB monetary policy, the rate, it's a big one, and the press conference. They usually come together. So really want to watch out for. That's a major one. Then we've got the bank rate on the pound. Then we've got unemployment claims of perhaps lesser importance in scheme of this week from the dollar. And then again, we've got another speech testifying, Powell testifying on the dollar. So twice this week, watch out for that. And then Friday, again, ending the week a little bit quieter. We've got retail sales on the pound and manufacturing PMI numbers on euro, pound, and dollar. So we'll keep an eye on these as well. But of course, you can see quite clearly Wednesday's major one, and then Thursday we've got some significant events and announcements. Okay, keep that in your list. You do want to have this in front of you each day if you are trading on a daily basis, and if you're not, then on the days that you are. Whether you are intraday or a swing trader, it doesn't matter. This will be relevant to you. Okay, let's begin with what we've got for this week. Some overlapping from last week, but nevertheless, we are looking at things fresh. Don't want to assume that things are always the same. We have to go with the flow of what the market is telling us. Let's have a look and start with the major ones as usual. On the pound dollar here, something we looked at before as these two target points, and we have clearly shot up into those targets. And let's have a look at what we've got for the next target. Well, it's quite obvious as we marked out this high up here. So let's delete all the previous markings just to clean up the chart, just to make things much easier to see cleaner. We've now hit this level. Don't need these below. Okay. It's quite obvious to see that we are in a bullish environment, taking out major highs, bullish last week, bullish candle. So quite simple, as you can see, to take on a bullish bias on this. And where are we going to look at? Well, we could see that there is a level here. Go down time frame, and here's a level of, as you may want to call it, support resistance. And we see also a gap, and this is a gap in the market. This will be in the last swing. So I will be paying attention into this gap where we have no trading in the price, and therefore there's a high probability that price may want to come and revisit that area before creating that swing to the upside. And the upside is the next level up here, 1.309. Let's mark that out, or 1.31 to be simple. So really want to see a better price drop in the week and then go higher. So that should be a nice risk to reward, about 350 pips to go until that next level. So clear sign of bullishness, and wouldn't expect the market to breach this low down here. That's the idea on the pound with this clear bullishness. Don't want to be selling it because we'll definitely be going against the major trend here. You can see how strong the pound is. So that's the idea, to get a better price, not chasing the market. And that is the outlook. Let's go back to the weekly. Here you can see that picture. I'll put a marker for, so that's not the one that I wanted, for the price point that I'm looking at here. So we've got first level here, second level down here. So those are the two to watch out for. If you want, you can, place an alert, so you can get notified when price reaches those levels and then be on and ready to take a trade if this price action shows that the price is now coming back to the outside, if it meets all your rules, and we've got a high probability scenario playing out. At the moment, of course, just beginning of the week, it's too early to tell. So let's see how the week plays out. All right, that's the pound dollar. Next, let's look at another major pair. Let's look at dollar CAD. Dollar CAD is not one that we've looked at for a few weeks, and mainly because of this choppiness. And what do we have now? Well, now we have clear sign of bearishness coming into the market. Broken of this structure, broken this structure, broken this structure, all these lows here. Very clear to see this bearishness. So continuing on this weakness really is the idea here. Pound dollar looking to buy, that is essentially telling us on the opposite side is weakness in the dollar. So once again, weakness in the dollar on dollar CAD means shorting the dollar CAD. So where do we go from here? Well, if we just get rid of all these, again, all these markings, so don't get confusing, otherwise it's going to get too messy. Okay, so here we are. The next target down will be the next low, and obviously the next lows after that. With this bearishness, with this bearish idea, what we're going to look for is of course, better price to enter. So here's the last obvious swing that I can see in the market. And where do we see a better price? Well, again, there is a gap in the price up here. So what I would look for is to get a better price and then drop. So as always, we've got a pullback and continuation, create the next swing, and here's that next swing. So that's a decent 350 pips away. Now this idea, this swing here, this price point would invalidate it if we break and close above it. There's the price point, there's the validation point, and here we've got our overall target in the longer term. And of course, below that, we'll see when it gets there, if it gets there. So there's scenarios here. Scenario one is this level, if we indeed react off it. And if we go higher, then we'll have to reassess and perhaps look at these higher levels as a place to short from. But you can see there's a major point here where the market completely died. It just fell off a cliff, right? And really this is telling you, this strong bearishness is telling you where price is going. Or I should say higher probability of where price is going. Now, Can also see a level here. We may get some bit of reaction, which is what we actually expect. So essentially the bottom line is getting a better price and then selling. So here's that in validation. These weeks closing lower and lower, very, very weak, as you can see. So continuing on that's the dollar CAD. Hope that's clear. If you've got any questions, put a comment down below, and please like the video. It really helps to reach more people, and share if you've got something to share with your own charts, or you may disagree. It doesn't mean that I am right. Of course, I get things wrong as well, and it doesn't mean that the analysis that we're looking at here is all going to play out just because we're looking at all of these, and they're supposedly all high probability. Some are more than others, but overall it is a statistical advantage, and we're just exploiting an edge here, as is always the case, no matter what your strategy or method is. Right, let's move on to the next one. Let's go to another major pair, this time dollar yen. Now, dollar yen is you can see an interesting one here, because what we've got is we have the weakness, we have this slow creep upwards, and we are bearish on the dollar, as I was just saying. However, the yen is very weak as well. So where do we go from here? Well, at the moment we could see bullishness. We can also see a level up here that we are reaching for, and we can also see this gap, as I keep mentioning, the gap in the price, and that is up here. So here's that gap. So what I'm thinking is bullishness to reach into this gap. Let's mark it up here. So it's about 143.5 before we get any possible drop. So at the moment the market is looking bullish, despite the fact that dollar is weak. Looking on the daily, you can see again very clear bullish sign. So here's the swing point, and looking at this, so really reaching into that before continuing on possible weakness in the dollar. Now I am capitalizing on the fact that the yen is very, very weak, and on a technical basis I would expect that since the market is not creating any turnaround, we would reach into these levels, at least here. And here's a gap in the price, as I was saying. So no yet sign of a turnaround, so I'm continuing with the bullish idea. So that's on the weekly. Let's go to the 4 hour as a lower time frame, and we can see that what we've had is a drop beginning of the week, and now we are creating that possible turnaround. So here's a level to look for. If we drop down another time frame, you can see we have got here a reaction, and right now we've reached the halfway mark. Now the favored scenario would be another drop lower to get a nice cheap price to then go higher. Now we may not get that, and if we don't get that, then we'll just have to let the market run, because we are not that far away from that first target. So what I would like is a drop, and then to get a nice risk to reward, reaching for this higher price here. We may not get that, and if we don't, then we can't chase the market, because what we're looking at here is essentially a expensive price, and we don't want to be buying at an expensive price. So there's not going to be much of a reward, and it's just not worth the risk. Okay, so we've got here that reaction, we've got here the previous swing. Go back to the 4 hour, to the low right here as a reference point, and we can see this is where we are planning to take the trade. Our kind of parameters where we are within our working zone. So that's that on the dollar yen. Still continuing with the bullishness, at least for this week, and then we'll see if we go from there. Next, I'll go to another yen pair. So let's go to the pound yen. And it's also one that we've been looking at before. And you can see here, well, these are targets have completely blown through it. So we're now going to have to look at new targets as expected for the week. Right. Yeah. So this is what we looked at here. And we just straight away from the beginning of the week just shot right up. The yen is so weak that we've got major strength on all the cross pairs with the yen. So there we go. That is the chart on the weekly. So what's next from here? Well, the next obvious swing will be up here that you can see. So we may likely reach into that. That's a high probability scenario, and we'll see if that is the case. At the moment, it was a very clear sign of bullishness. So just, going to go with it and continue on that bullishness. Here we've got the lower time frame. We can see that the last swing was down here. I'm gonna just draw a fib as a reference point. It'd be nice to get a drop lower, get a better price. Into 61.878 level, and then continue to the upside. We've got some major upside here. There's a lot of pips to go. If we reach that area, it doesn't mean we will. It's just a point of reference at the moment, but really want to get a nice better price and create that swing and then go higher. And the moment, the obvious bias for now is bullishness on pound yen. So that's what I've been looking for. If the price breaches this swing, then I'm gonna have to step back and reassess and see what's happening, and then come back perhaps next week to see what happens. We do have pound news and major pound news this week. It will be wise to perhaps sit on the sidelines until we play it out and let the volatility die down, let the market take its set before continuing on this move on the bullishness on the pound. We don't know what news will do, how it's going to take the market, so let's just see what happens, not assume anything for now. At the moment, we're just going to keep in mind the bullish bias. Let's now move to the next chart on the list. I hope you're enjoying the video this week. As always, comment down below if you have any comments about any of the charts. Let me go next to another pound pair. It's pound news this week, and we have several pound charts. So again, manage your risk, pick your charts carefully, and go with what works best in terms of what you see on the chart, not what you believe or you think the news will do, because the probabilities are not in your favor. We don't really know. Yeah, go with the flow of the market. So we've got pound dollar, pound yen, and now pound New Zealand. Let's have a look at pound New Zealand. This is one we looked at last week, and this is what I was looking at these levels, possible levels to get a reaction from, and we did get a reaction off this level here, and now slowly petering, shifting higher. So now we have this reference point low, then we can have our point of reference to look at. So here is that point of reference. Let me just grab this here. So that's the low that we're looking at for now. If you look on the weekly, we're expecting the continued bullishness, and that's what we've got so far. So what's next from here? Well, another bullish week, continuing on the bullishness. Here's that level that I was looking to reach as the next point on the weekly chart. You can see this little swing. If you zoom in, you'll see there's a swing, there's a wick here, that's the next wick, and that's the wick after that. So these are the target points that I'm watching for. Now, if I zoom in, and you can see this is the last swing, and that's on the weekly, on the 4 hour. That was last week's low. Now that I've got this kind of an anchor point, a point of reference, then I'm not expecting the market to breach this level. And continuing bullish. So what have we got? Well, we've got a break here, going higher. We've got higher high, and this would be the major low. So what's next? Well, what's next would be, if I just zoom out a bit, you can see there is a level that was developed here to get a better price, and then continue higher. The first target will be the obvious swing high, the most recent, oops, that's the wrong one, the most obvious swing high, which would be up here. Then we're looking for the highs after that. So from this level to highs, it's about 300 plus pips. Let me bring the price level in. That's here. And the price level for this low, if you need it, as a reference point. And if we go back to the 4-hour, let's wait for that swing to be created with perhaps the news. If the market just shoots higher, goes without us, and simply blows the highs, then so be it. We'll just have to jump on the next opportunity when it comes, if it comes, at the next point as we go towards these levels and reach higher. That's assuming we do even get that. So of course we can always be wrong. We always have to keep in mind that there's a possibility that we are incorrect and the market may do something else. All right, so that is the bias on pound New Zealand, and that's the levels that I'm watching for. Once again, these are just assumptions, these are just ideas. We only really know when the market plays out, when the price action kicks in, and then we'll see what happens. Okay, so that's the idea on pound New Zealand, the continued bullishness, as you can see on the weekly. Okay, where next? Next, let's go to the commodity. So we've got gold and back at oil again. Let's have a look at what we've got. Let's go to gold first of all. On the weekly, what do we have? Well, we've got this choppiness in the market, this initial momentum move higher. This is the obvious bullishness. We're creating new highs, new highs, new highs, and these lows are being left behind. So really, as you can see, that's the major swing low on the weekly. We now have a choppy range movement on the weekly chart. Where do we go from here? Well, first of all, seeing that this is bullish, and also remembering the fact that dollar is bearish overall on the higher time frame, there would be, this is a confirmation, a type of a correlation idea to indicate that we should be bullish on gold overall. Now, what have we got last week? Well, lots of choppiness in the last few weeks. We've got this kind of pin bar. Didn't close that bullish, but still a pin with a tail or a wick to the downside, indicating some kind of strength, if you like, some kind of rejection here. Now, the question is, are we going to follow through on that? At the moment, we're still in this choppy range. As you can see, the last few weeks, this whole thing. So it's low probability to trade as it stands in terms of really stacking the probabilities in our favor. So where do we go from here? Well, we have to look at it two ways. If this low is going to hold, then we're expecting to go higher. And if it won't, and if it breaks, then we're going to be going lower. My eye also looks at this gap down here. So this may be something significant to watch for if we are going lower. Now, what do I want to see? If I'm going to think about bullishness, then I'm going to play the bullish scenario. Now, if this low breaks, then of course the bullish scenario will not hold, and we'll just, you know, leave this alone, step away, and then come back to it after. Okay. With that, let's have a look at what the bullish scenario is. Well, let's go to the 4-hour. Here's the high of last week. So if we're going to go bullish, then we would expect a break of the highs. Let me just remove this box. So here's a break of the high, last sort of significant high. So I would expect to break a nice clean momentum break, and then a pullback, as you may know from before, and then continuation to the upside. The continuation on the upside will be the next obvious levels, which will be here, here, and here. Quite clear to see. So if we hold this level, and we may get a bounce on this gap in the price, and then move higher, then when we move higher, then we look for that. But that may take some time, and maybe not even this week. We do have some major news this week. Let's have a look at what's actually happening, not assume what's going to happen. We marked our levels, we marked our parameters, we see what we've got in the market. Let's see now where the market wants to go, if it indeed wants to play to the idea that we've got here, which is the bullish bias. Of course, we could be wrong, and the market may prove us wrong, so let it show us the direction, let it prove us wrong and show us where it wants to go, not what we intend or try to convince ourselves where it wants to go. At the moment, as I said before, just an idea, so let's see whether that will be the case and the bearishness in the dollar continues this week, or if we get a bit of a retracement bullishness come in, which would be the inverse of what we are looking at, or what our bias is, I should say. So that is the scenario. This is where we're going to play how we're going to look at gold. You may also have your own view. So here's that invalidation. Here's a marker that we may have a turnaround if we do, and here's the level to watch for if we break through that. Okay, so we marked out our scenario here, and I'm going to wait for that. If it happens, let's just observe. For the moment, it's just early in the week. You don't want to be rushing it, don't want to be pushing it. You know, many people think because it's Monday, you've got to, you know, get going or start trading, but that's not the case. You can always let the market be and observe what the scenarios are telling you. There's no need to rush. Okay, last we have oil here, and we haven't looked at oil for a while, have we? Well, there's a reason for that, because of this choppiness in the market. Really no indication of where it wants to go. We did have this bearishness, we left this wick to the downside, the market hunted this low, and now we are in a range, leaving these wicks behind. Now the reason I'm looking at this is, number one, bearishness in the dollar, as I keep mentioning, which would in theory indicate bullishness in oil prices. And if that is the case, well, what do we want to see? We want to see some bullishness in the market. At the moment, we don't really have that because we are in a range. However, we have now created this pin bar, which looks like a possible sign of so-called strength, or let's just say for ease of use, the price possibly moving a bit higher. Now, what do we want to see if we really confirm the fact that we are going higher? Well, we want to see major structures being broken, and the last major structure is here. If I go to the 4 hour, there's these highs up here, or last week's highs here also, right? So here's a major high, and we really want to see a follow through, a break of the high, some kind of nice clean break, and then the market coming back to a better price. There's a bit of a kind of a level here, but I'm not going to stick to it too firmly because I want to really see that, well, see that the market is telling us where it wants to go rather than assume. So here's the break of first high, and there's another one. Okay, so here's that break, here's a pullback, and I want to see a continuation to the next highs. So there's a one high here, there's a swing, there's one high here, and that would be the idea for the trade. Yeah, there's quite a decent risk to reward there. The place where I would invalidate this at would be down here. So that's a major swing low in the market. If we go breach below this low, then really have to really reassess. We're back inside, back to the downside, breaching structural lows. So we'll have to completely leave it alone and reassess. So at the moment, it is in the range, but we do have some price action that hints at possible bullishness. We do have the dollar, which hints at possible bearishness, meaning bullishness in oil. So I'm going to look at that from that perspective and then watch to see if we follow through on that idea. So that's the scenario, if, and then not assuming that it's going to happen. Okay. For now, it's just an idea, just place. We just want to see the confirmation. We really want to see it kick in, and maybe the volatility will come in when we have the news. For now, let's watch it and see what happens. These are the charts for this week. Thank you guys for being with me. I hope this has been useful for you. And as ever, manage your risk. Pick the charts carefully. We do have a few dollar-based charts. We do have a few pound charts. Watch out for those. Really want to pick them, as I was saying. You don't want to be spreading yourself too thin, and keep your focus as a trader. Okay, guys. I'll see you next week on next week's video. As ever, more charts, more analysis, and help you out with your trading process and your trading journey. Thank you for joining me. I'll see you guys next week. All right. Have a good trading week, everybody. Bye for now.